Welcome to the end of day review for Friday, the 1st of December 2023. Starting off with the economic calendar, as you can see, there was no high impact London session news. We then have some high impact USD news, with ISM PMI being the significant news. What you can see is PMI was negative for the USD, and thus we could expect GBPUSD to go up, and I guess EURUSD as well. Looking at the chart, starting off with a 4-hour on GBPUSD, what you can see is we came into this pro trend OB. However, we have validated the pullback phase, and this pro trend OB might not actually hold, which means for the day we could trade both longs and shorts until we eventually reach the pro trend extreme. However, we can't discount the fact that the underlying pro trend leg is to go long. In terms of the 15-minute, today was somewhat of an anomalous day because we had both the high of the day and low of the day being taken out by the New York session. So under normal circumstances, it's highly probable that the high of the day will be created before New York, or the low of the day will be created before New York. Given this fact, because the low of the day was created in the New York session, we could anticipate that the high of the day would hold, and thus any short entries moving further into the day would make sense. However, what you can then see is price actually continued up and took out the high of the day. This is likely a combination of both the PMI news release, but also the fact that the Fed chair is talking, and there's probably some hints to suggest that there won't be further rate cuts for the USD, or there may be rate cuts on the cards, which is weakening the USD and causing the pound to move upwards. Starting off with how we started the day, essentially on the 15-minute, what you'll see is that supply was in control, and we anchored our FUB from the previous day extreme to the previous high of the day, because the current day extreme is not lower than the previous low of the day. So we anchored our FUB to that, and it also relates to the 15-minute chain. As you can see, there was no 15-minute change of character level, so this was indeed the change of character level, and all of this supported the fact that we should anticipate further shorts. In terms of how I placed my entry, I placed it above the POI, trying to cover the high of the day, just because of the fact there's a chance that that longs and shorts can play out for the day. However, what you can then see is price came into the 38.2 level and then subsequently reacted from that, and coming into the New York session, I was questioning myself as to whether I positioned this badly. However, I think it's somewhat judgmental, and there's no way to collect such data to suggest that always using the 38 or something higher is better or worse. So we'll accept that we'll accept that this trade wasn't entered based on a judgmental matter. Either way, this trade would have been a break even because of the large stop loss. 1 to 3, my minimum target is around here, and that wouldn't have been hit for today. Then moving on to the 5-minute. So what we need to keep in mind here is that we've got this pullback phase lag, which this 15-minute order flow supports. However, we've also got this primary leg that was validated by a 5-minute change of character, and then this primary leg was then extended when we candle body broke this. You can see there's a bunch of demand chains in here. We had a 5-minute change of character, but nothing substantial enough to suggest that we're actually coming from a supply, and that supply is holding. And thus I was happy to take this trade, which was triggered in the lull, which is fine because the order flow was already validated previous to the lull during London, so to speak. So I took this trade. This was a loss. The loss was validated quite late in New York, just before the PMI news, which is fine because coming into New York, the idea is that the high of the day or the low of the day is probably already formed. And if this is indeed the case, then this trade should hold theoretically. Then what happened is, okay, so we put in the new low of the day in New York. Since New York generally doesn't put in a new low of the day or high of the day, this can be assumed to be an indication that actually shorts are the real daily direction. Given this fact, together with the fact that there's a lot of evidence to suggest that supply is in control, both 5-minute and 15-minute alignment at this point. In addition, whilst the PMI news is not suggestive of long trades, of short trades, more suggestive of a weak pound USD, there is also the fact of this medium impact news and then the Fed chair speaking. However, I feel like the argument I used to validate why I should continue to take this trade was weak. I had the opportunity to get out of this trade, break even or with some profits, and I held on, which realistically was just because I was hoping that I'd cover some losses and break the losing streak I've been experiencing lately. But this is not smart. This is wishful thinking, and I'll learn from this. But it's bound to happen, and I'm human, so yeah, I guess the lesson here is I should have not taken or at least closed this trade, given that I did indeed have the opportunity. And then to further understand this PA, what you can then see is now we've put in a new high of the day, which then makes today really anomalous because usually by the time New York comes in, for New York to put in a new high of the day and low of the day is quite strange and rarely happens, if ever. So I guess that's a silver lining in that, yes, I took the losses, but it was also a bit of a strange day and there was a lot of complexity to it. But I also think that this loss was not valid. That brings me to the end of GBPUSD. I'll touch on EURUSD, starting with the 4-hour. So what you can see is on the 4-hour we were essentially in this pro trend extreme OB, and we had this pullback phase OB. But because we had already tapped the pro trend extreme OB, shorts are off the cards, and we can play the pullback phase only if we actually have 4H backing. So i.e. we need price to get in here, then we validate IRL with an order flow shift, and then we can trade based on the IRL within the triangle that forms somewhat like this. So essentially our London bias was just too long. There was no scope for shorts. And if we go into the 5-minute, what you'll see is we had a 5-minute change of character and then a primary leg created. I don't think there was even anything. Okay, it was on the 15-minute. By the 15-minute there wasn't evidence of demand holding, so we were more so paying attention to the 5-minute. And on the 5-minute you had your change of character here, you had this window of imbalance that was respected, which then created this demand chain which we could validate why the primary leg, why demand is in control, and that the primary leg has indeed been created, and we could potentially create this pro trend OB. However, what then happened is we had 5-minute shocks and supply took control coming into Frankfurt and London, and based on this we then, because we have the primary leg, we could identify 5-minute primary leg OBs to support new order flows and validation in the form of secondary legs. But as you can see, we had those change of characters, but at no point did demand hold. So there's the chalk, and if demand was to hold, it was going to be around here. Here we had demand taking control. However, this is during the lull, and per my rules, if order flow is validated in the lull, then we wait for the New York session open, and then with that comes taking into consideration that we require the sweep of the London range with regards to where we place our entry. In this case, you can see demand to control the London range wasn't broken. There's nowhere to anchor our fib to tell us where to put our stop loss, so there was no valid trade over here. Anyway, EURUSD then plummeted at around 12, and at 4 p.m. this afternoon, when this 4H candle closed, we essentially validated that the pro trend 4H extreme OB has failed, and now we've wicked the swing leg. So our options are, well, I guess we'll see how things turn out on Monday, but we potentially going to cause a market structure change of character, or if not, we can build a new pro trend leg once we can validate that the change of character 4H OB is candle body broken, creating a new primary leg with the objective of targeting this. In terms of trying to play the pullback phase, yeah, so I guess we do have this OB. Essentially, the pullback phase has achieved its objective, right? It's reached the pro trend extreme. It's taken out liquidity to then assume that it is going to actually break this is fine for now. What we can do is play the pullback phase help us. Sorry about that. Just to pick up where I've left off, what I was saying is, because we weak this void swing structure, it doesn't negate the fact that we're still in this pullback phase leg. However, because the pullback phase essentially achieved its target, in order to continue shorting from the 4H pullback phase, we'll need 4H backing, IRL validation on the lower time frames, just to make sure that we have sufficient liquidity to target to the downside. And in addition to that, we'd also need to consider that once this is body broken, then we're essentially in an unconfirmed scenario, and we have to be a bit more cautious in how we trade. Yeah, so that essentially brings me to the end of my end of day review for today. I will do some fresh markups for my charts and my records, but yeah, I'll overlay that separately when I upload the video.